Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. And if you go to our website here, we're just about to launch a brand new website, by the way, with a whole rebranding effort. But until that happens, this is the one that you can go to. It'll be the same URL, by the way. You go to subscribe, scroll down to the live trading room. That's where I'm coming to you from live today, the live Discord room. Big community of amazing people, all levels of trading, some of whom are very new to trading and are making all the classic mistakes that we've all made throughout our trading lives. And some have been trading like myself for dozens of years and can share wisdom, insights, and what they see moving in the market. And it's just a very supportive group. I don't allow any swearing. I don't allow any politics, and we all support each other. It's just a great place. So if you're interested in that, you can join the live trading room, 49 bucks a month. Or if you want to add on the options room, if you're really into options, we only do long calls and puts, nothing fancy. You can add on the live options room there, 40% discount. All right, so let's go over to charts. So we've got kind of a market sell-off going on this week. Today's been the worst day of the week, but I have to say that I think this is an extension of what we saw in the previous 2 weeks. So this is the top right here, all-time high in the S&P 500, and then it was a straight, not a straight shot down. It was a nice, modest, actually, soft pullback into the 50-period moving average over a 2-week period. We had a little bit of a bounce, got a whole bunch of new longs sucked into the market, and then a big slam today. What was the slam on? What is causing this market to go down 2% in the Nasdaq and 2.5% in the Russell and 1.5% in the S&P 500? Well, there are several things. First of all, the government just opened up after I don't know, a month and a half, 42, 43, 44 days of closure. Now, the market did pretty well during the government shutdown, but there's a lagging effect, right? The lack of government spending in most sectors of the economy for 6 weeks at a time is going to have an effect. There will be, of course, some backlog. You're going to see a lot of new contracts get rewritten and things like that. But until that happens, the market has to kind of figure that, yeah, there is a lagging effect to the government shutdown that's negative, right? Bearish. That's part of it. The other part is that we have had this narrative going on, which is really the cause of this pullback right here around AI. And when earnings came out, especially in the big mags, you know, the Googles and Microsoft and Meta, Facebook and all of that, when those earnings started coming out, one of the things that the CEOs were saying was, hey, we're spending a lot more on AI than we kind of thought we would. And we're not really seeing a whole lot of profit from it just yet, but we have every confidence that the money we're spending now is going to return tenfold down the road. So the market wasn't real happy with that. The CapEx numbers going up, margins coming down, and they got punished, right? A lot of big companies got punished. And a lot of the smaller growth names got really punished. So anything kind of related to data centers, quantum computing, energy required for data centers, these companies, several companies that have shifted from Bitcoin mining to mining quantum energy, those companies have been hit the hardest. Now, I think a lot of those will come back. Some of them may not. Some of them may be heading to penny stock status. But there are some good winners in that group, and I think they will still do okay. But it's not quite yet. We're not quite yet at a place where we can start buying shares of those companies. But we are at or near a place where we can start adding back some of the shares we've had in recent weeks in some of the mega stocks, right? The mag stocks, the big stocks, and their related names. All right. Just as a general overall rule, Bitcoin and Ether, they're off my radar, and they have been off my radar for a couple of weeks now. And I think everybody should be on the sidelines with those for a while, at least until they settle down. Gold has had a great run. Silver's had a great run, but they're going to peter out and cool off for a little bit. So it's not easy finding the sweet spot of the current market. Let's see if we can at least find a few little sweet spots somewhere along the way. All right. So S&P 500, we're coming down into this area right here. We hit the low this morning, or I guess just a little bit ago, because the lows of the day happened just a few minutes ago. We hit that low, which is a little volume shelf right there. It's not a major one because see this green box here, this gray box, this powder green box. Those are actual support shelves based on volume and price. And we don't have anything up here forming just yet. So there's not a critical mass of support right there on a volume basis. But on a price basis, yeah, right? We got down here several times in recent trading and bounced quite nicely off of those lows. So we held it so far today. If we can hold, maybe get up a little bit higher, start taking out some intraday resistance levels, then maybe before the close today we can start to nibble. And if not today, then more likely tomorrow. By the way, I have a guy who does cycle work, and that's one of his indicators down here at the bottom. And his analysis is that the Dow Jones is okay in the best of the four major indexes. The S&P is kind of okay going forward from here. The Nasdaq is not yet okay. The Russell 2000 may not be okay for a while. That's sort of his consensus. Okay, so it makes some sense to me. I'm not trading exactly the way he would want me to based on his analysis, but I'm out of the S&P. I'm out of the Nasdaq right now. I haven't been in the Russell for quite some time, but we are long the Dow Jones. So that's to me a stable place. You've got not just a few handful of tech stocks, but you've got healthcare, you've got industrials, you've got banks, all adding to some stability in that index. All right, so the S&P 500, close to a bottom, I'm pretty sure. We might even test the 50 again tomorrow and then bounce back up from there. That might be the entry. But as I said, if we could get up a little bit higher today, maybe up near 6,800, I might be nibbling before the close, before the bell today. The NASDAQ, however, yes, it did get stopped right there at the 50-period moving average. That's a good place where a lot of funds go out and they start buying shares of major indexes like this. However, on a price basis, there is a pretty good line right there. And until we get back up above that line, and maybe it's a little bit lower, maybe it's more like that. Once we get back up above that line, we'll be in a safer place to buy the NASDAQ. I happen to think that the NASDAQ might be heading a little bit lower, or at the very least, kind of consolidating around current levels before it gets really back on track to the north side. I'm going to hang on to that thesis, but I'm clinging very loosely to it. And I'll jump on some TQQQ or MNQ, the micro E-mini, if we need to see that. If we start seeing some good intraday bullishness on the 1 hour chart, that's kind of my bread and butter chart for intraday buy signals, then maybe we'll start to nibble. Probably not today, maybe tomorrow. Small cap index, as I said, no-go zone. Why? Because we are now well below the 50. We're well below range support. We're down into a volume shelf. That's a good thing. Last time we got down here, it bounced, got down there again a few days ago, and it bounced. However, these volume shelves, I know this indicator very well, and if it gets any lower below that volume shelf, it gets kind of down to around 2360, you'll see that volume shelf disappear. In other words, it's been violated. It's not there anymore. It's no longer a part of the chart. So, and we're a good third of the way into that volume shelf right now. I just think until we get better clarity on the Russell 2000, and you know what, the Russell 2000 is not going to get clarity until we get all the data out there. With the government shut down, we haven't had jobs data, we haven't had inflation data, GDP data, a bunch of other things that are really important. The ISM, or did the ISM come out? I'm not sure. In any case, inflation, jobs, those are the two biggies, and we just don't know at all what's going on. Don't know jobless claims. We don't know new jobs created. We don't know the GDP number. We don't know if CPI is 3.1, which was the expected number, or something higher, right? We just don't know. And so because the small cap sector is very sensitive to interest rates and inflation It's just a no-go zone until we get clarity. Now let's take a look at Bitcoin. I've been saying Bitcoin is a no-go zone for a couple of weeks now, and I'm hoping that you got the message. Not just because it started to print this this head and shoulders top, which is not a very strong pattern, not a very reliable pattern. To me, the mark of unreliability in the Bitcoin index was this bounce here off of a clean neckline, right? Nice looking bounce. It took a couple of tries to get back up there. We got all the way to the 50 period moving average. Things looked okay, right? They looked okay there. And then it was a strong slam down from there. Technically speaking, that is damage, major technical damage that is very hard to overcome anytime real soon. We had a weak little dead cat bounce back up to the underside of that, and then again confirmation, slam 3 days right back down again on pretty heavy volume, very heavy volume. And now we've lost the $100,000 level, which, you know, that level was intact before Trump was president, if you can believe it. But this term, not the previous term. And, you know, Trump was supposed to be the great crypto president, right? He was going to create all kinds of amazing things and give a good tailwind to Bitcoin, especially. And we just haven't seen any of that happen. So I think people really latched on to Bitcoin as kind of the saving grace. A lot of young people, especially, started buying crypto, buying Bitcoin, even using it as their major purchasing power. And they're probably the first ones to get, the last ones to get in are going to be the first ones to get out. And I'm afraid we're just going to have a shakeout for quite a while. Where does it land? I don't know. Same is true for Ether, although I did say to someone in our room that I think 2,800, because that is the top of some previous trading range there. 2,800 would be a pretty good place to see Ether start to stabilize. The 200 period moving average is not that far away. That has been influential for price, as you can see back in here. It's at a very modest volume shelf here based on the lows of the recent range. So it could hold, it could get a little bit of a bounce, but man, Ether to me is even worse than Bitcoin. I would stay away from Ether for quite some time. Now, gold has had a good run. We were in gold all the way until yesterday. We got out of it. It was a little bit too early because it was all upside from there, and then it was upside again this morning. We could have gotten out higher. That's okay. It was a great trade. We took some profits in both trading rooms. We had calls on, which got 67%. We had Shiny, the 3X bull version for gold ETF in the live trading room. And it was like 20% there and 67% in the other room. And it was just a nice trade. Now I think gold is going to cool off a little bit. I don't think it's a short. I really don't. Although this inside day reversal bar is a little bit scary if you're still long gold and you're a short-term trader. If you're a longer-term trader, I think you'll be okay. I wouldn't, if you're thinking about holding on to gold for 6-8 months, I think you'll be okay. But I do think that, as I said before, this is going to do a little bit of a cool back and fill off of that ramp. It shouldn't get any lower than the top of that range. You've got the 21 period moving average, which will come into play. And then from there, we should get a nice run higher into the end of the week. Same is true for silver. Silver's printing a double top today with an inside day bar. That's not a good look. That's a bearish look. There is likely some bearish divergence up there on this current top. It will probably come in a little bit sharper because it has not been quite as strong as gold. But again, coming back down under 50, and then silver should have a good rest of the year into next year. Miners kind of the same thing, although I think the miners are going to be a little bit harder hit than gold. So if you really want to short the gold sector, you could put on something like Dust or JDST, which is the junior miners on the bearish side. There is a gold ETF. There are a couple of gold ETFs to short gold with. GLL, which is the preferred one. It's a 2X bearish version of gold. And then Dull, DULL, but that's like a penny stock now. So it's under $2 a share. So I wouldn't do that one, but the other one is okay to buy. If you want to take a short-term bearish hold in gold. All right, just a quick look at the GDX, which is the gold mining index. We've got a bearish engulfing candle forming here. It's like putting on the brakes, right? Volume is up pretty good as well. And you've got gaps down here below. The price shelf is around 72.80. It's all the way up to 77. So it could come in 4 or 5 points from here. And again, if you want to ride that, you can do dust. I don't have it, not yet. I kind of think that it might get a little bit of a bounce higher again in the next couple of days and then roll over next week, but we'll see. We'll see how that goes. Okay. One sector index I wanted to look at is XBI, which is your biotechs. And this has been one of the strongest sectors. XLV as well, which is your healthcare sector. Healthcare is always a good sector to get into when the market gets volatile because it's a safe haven. Everybody has to have healthcare in some form, whether it's insurance, whether it's a chain of hospitals, whether it's a pharmaceutical company, a drug maker, et cetera. You need healthcare. We all need healthcare. And so regardless of the economy being strong or not, you'll see healthcare stocks tend to do pretty well, especially when money is coming out of riskier assets. So I do like that. I'll show you a few biotech stocks that I like. There are 3 of them that I have on my greens list. I'll show you that in just a moment. But it's been a strong sector. Yeah, it's down a little bit today, but it just hit new all-time highs yesterday. So let's give it a break. Oil, I thought oil was going to do really, really well when it was up here and breaking and knocking on the 200 period moving average. And then it got real slammed yesterday. It knocked me out of a UCO share trade. It knocked us out of UCO calls in the options room. And it's just part of trading, but I'm kind of a little less bullish, actually a lot less bullish on oil than I was up until a couple of days ago because of that big slam. I don't know exactly why it got slammed. I don't see anything in the headlines, but it did. So now it's broken. It's in a downtrend. It's broken a bit of a relief rally to the downside. That's a bearish signal. I wouldn't go long oil. A couple of days ago, yes. Today, no. So that's just how it is with trading. Okay. So I think the semiconductors are going to come into actually not a bad chart here at all things considered. Much better than the NASDAQ itself. We are well above the 50 period moving average. We're just touching the top of the pink zone of the LRC, the linear regression channel. And if we pull out that range, you can see we're just testing, almost testing the top of that range, having dipped below it a little bit. So semiconductors, I'm not so sure today's the day, but if anyone is out there nibbling on SOXL, I'm not going to kick them in the pants. AMD has been good. NVIDIA, all things considered, has been okay. And you've got some stocks like SMCI and ARM that are that really deep down, ready to bounce off some levels of support. And you've got Qualcomm and Avgo both doing pretty well. So it's a good sector, right? It's a big, it's probably the biggest tech sector with the most blue chips in it. So of all the tech sectors, semiconductors is a good place to be. Okay, I think that's about all we'll do for the sectors, and I don't want to overdo my time. So let's go to the mags. These are your top stocks by market cap. I have a few extras in here, but these are all tech stocks. They're all at the top of the index, both the NASDAQ 100 and the S&P 500. And Apple is doing the best of them today. So this is a good-looking chart. Hit all-time highs on a closing basis on Tuesday. A little bit of some back and fill yesterday, doing the same thing today, but it's an inside day bar within yesterday's inside day bar, which is on top of the previous day's engulfing candle. And we're at the top, right? The top third of that range, and that's a good place to be. So Apple's doing just fine. Yeah, it's slowing up here at a pretty steep volume shelf. When it's purple like that, it's a pretty strong one, but I don't think it's going to head back lower. If it hasn't taken out a bunch of these range lows and tested the 21 and gotten down near the 50 in this week, especially today, it's a good one to hang on to. We're long Apple in the live trading room. We took profits this morning on Netflix. Kind of glad we did, although it did get a little bit higher and then it went way down, and now it's kind of back into the middle of that range. But we rode this nice four volume candle higher. It was a good play for us. We were playing the split. We knew it was going to run into the split. What happens after the split, nobody knows. And sometimes you do get sell-offs after a split. You know, the common sense understanding is that everybody comes in after the split because the shares are now 10% of what they used to be in terms of price. But the problem with that thesis is that, excuse me, everybody's thinking the same thing. And so they're thinking, you know what, I'm going to get a little bit early so that I can enjoy this amazing run that's going to happen right after the split. And then everybody's already in, and everybody that wanted to buy has gotten in, and then nobody's left to buy anymore. So that's where you get the sell off. So I'm glad we got out. I think we can probably get back in a little bit higher, but it's doing well today, all things considered. Facebook, big slam here on the CapEx issue after earnings. Horrible day yesterday. Started to look like it was, it gapped up, got a little bit higher this morning, and then it's been pretty much all downhill from here. But I do think that as long as we stay above the lows of that reversal bar right there, and the volume is not real heavy, we're not. I mean, yesterday was heavy because it did move a long way, but today's volume so far pretty light. Previous day's volume light. Day before that pretty light. So there's just not a whole lot of sellers left anymore in Facebook. That's my thesis. I'm going to stick to it, and I do think that a longer hold in this one will work out pretty well. Qualcomm I like as a good-looking setup above the 21 period moving average. Nice looking soft pullback, banging up on the resistance trend line. It's just a matter of time before this breaks out. You can trade this with QCML, which is the leveraged bullish version of Qualcomm. We're long Microsoft in the long trading room. We bought some of it down here, and it's doing a big reversal today. Not a good looking thing just yet because that could be potentially a bear flag. But if the NASDAQ itself is reversing next week, which I do think it will be, then this will come up with it. All right, everything else is a little bit iffy here. I would say NVIDIA, it did stop at the 50 period moving average, but because of all this CapEx issue, don't think I would want to be a holder over earnings. It's doing the same thing that Microsoft did in that it's above that reversal bar and printing a higher low. And if we went down to like the 1 hour chart, you're going to see this a little more cleanly, right? So here's that deep cut low and the reversal. Here's the higher low. I'm not even sure what that moving average is. They don't seem to work very well on my intraday charts. But the 21 is clean. The 200 is clean. We're just below both of those. And there's just going to be a lot of overhead for it to get back up above before earnings. I don't think NVIDIA is going to be a good buy before earnings. I would wait until after. We keep nibbling on Oracle, and I've tried a couple of times to pick up some of these intraday bounces here as a sign of the bottom. And, we're just using small positions. And right now we don't even have a stop on ORCX. That's something you don't really want to ever do. But we've got a huge win in Tesla short, which is paying us tons. We banked a nice trade in Netflix. We banked a nice trade in yen, Chinese signal, and everything else. Apple's doing okay. We're long that, and everything else is cash. So I don't mind holding on a small position of a way oversold blue chip tech stock in the hopes that it's near a bottom and will start to reverse. No confirmation of that just yet. And if it gets any worse, if it gets below 20, ORCX is around 22 something. If it gets closer to 20, I think we'll probably just bite the bullet and call it a day. We've had to do that once or twice over the years, but it doesn't happen very often, and I don't do it very often, but I just wanted to let you know that in certain circumstances, it's okay. It's okay to take your stop off. If you've got a lot of profit in the table, you're sitting on a lot of cash, and it's way oversold. All right. A PLTR to me is an avoid for now, and as I said, the NVIDIA is as well. So let me just run through some of my greens list. And where are we at? 246. I will take a few chart requests. So I'm speaking now to the live trading room. If you want in the trading main room, type in a ticker symbol, just one person, one per person. I'll look at a handful of those. All right. So I've got a few biotech stocks in here, and all of them on this list I like, not just for fundamental reasons, but for reasons of their chart. As I said, the sector's doing really well. It's a good space to be in. AMPX is your lowest price of the ones that I have on here. You can see that it is holding quite nicely. Former resistance, now support, right? That's an SR flip. When it is former resistance and then it breaks up above, it comes back down and tests that level as support. It is flipped from resistance to support. Sometimes they flip from support to resistance. And it's holding very nicely. We tagged it again this morning. We're back up near the 50. The mantra with the LRC is that if you're in an uptrend, which this is, and it gets down into the pink zone and reverses, that's a good buy signal. If it's in a downtrend and it hits this powder blue zone up here at the top and reverses like it did there, it's more of a take your profits or sell short. So that's one of the biotechs I like. This is another one here, Mind Medicine. Not exactly sure what they do, but again, you've got the uptrending 50. The 21 is above the 50. The 50 is above the 200. The LRC is nicely sloping higher. You've got a little bit of a weak low volume test back into the 50, holding above that level, printing a, I don't know what you would call this candlestick here, not really worried about that, but it is modestly bullish in a very bearish tape. And that to me is a good looking setup. The other one that I like is, did I do AMLX? Yeah. So this one also nice uptrend. It's a little bit weaker than the others that we just looked at, but this in a setup like this, you don't buy it until you get up above that resistance trend line, and we're not there yet. It's building a little bit of a base, right? 5 days in a row, 6 days in a row down here at the lows, but it's going to have some overhead to get through. This is not the best setup. I just have it on the greens list because if it gets above that RTL, I might be interested. This is the one that I like the most. And I might even put my live trading room into this one before the close or maybe tomorrow. But big up on earnings because they came out and announced an FDA approval, which is always very, very good for a pipeline spec biotech. And the fact that that gap is not closed, that's a power gap. That's a very good sign. Haven't even gotten into that gap at all. That's a good thing. And we're holding here at the 21. The midline of the LRC, giving us a little bit of a narrow range candle when everything else is falling so sharply. That's all bullish. It's just that it's not very bullish today. People aren't out there buying shares of this today. They're more sort of, a little bit of selling here and a little bit of whatever. But no, this looks good. So I would wait until it gives me a green candlestick on the close. Maybe we do that today, maybe tomorrow, and then I would be a buyer. What else do we have in here? We've got the energy play, CEG. It's not ready to go today by any means, but last time it was down here in the pink zone, it rallied quite sharply up, right back down again. And the cycles, you can see the big granddaddy cycles down at the bottom, which is where you want it. The intermediate cycles are starting to roll higher. It's just not ready to go today. We need to see a good green bullish reversal bar there. AMD, one of the best of the semiconductors here in terms of price chart. We're up here at all-time highs, just a little bit below, filling some gappage. And I think actually with the cycles down here, and yeah, we're starting to pinch on the MACD, which is good. You want to see that. Had a big up day on heavy volume yesterday, and there was some news on the stock that I'm forgetting about completely now. And now we're just kind of backing and filling and closing in some of that gap. This looks good. Looks good. It's certainly a hold. If you're not yet long AMD, I think you can nibble a little bit here and maybe wait until it comes down and tests the 21 again. Marvel I like for fundamental and technical reasons. It's a good looking chart. It's just been in this pullback all the way down to the salmon zone of the LRC without giving us yet a bullish look. So let's wait until it gives us a good reversal bar, but keep an eye on this one. Keep this on your short list. Zscaler is one of the better names in the cybersecurity space. Coming down to Tesla 50, it's not a go today. We need to see reversal. What else should we look at? GE is good, right? It's ran into this volume shelf, very soft, little downtrending range here, and you can see that the lows are, for the most part, getting higher. So it's a tight consolidation. I like to call that the apex setup. We're not quite at the apex. Maybe a couple more days where it consolidates inside of that range, and then we can look at going long. And one last one to look at is Qualcomm, which we did already. So, all right, let me see what you're interested in. Let's take a look at Lilly, which has been really strong. Yeah, still strong. So we had a call play on Lilly. We followed what's called an alpha gold alert into Lilly calls over in the options room, and it was down here in this nice looking rounded bottom base, and it was below. Whoop, I don't want that. Rounded bottom base. There's your rounded bottom, right? Here is your trend line. It was somewhere like, I think it was that breakout bar right there, or it might have been the next one. We got long on a breakout bar with an alpha gold alert, and we rode this very nicely up. I'm not sure if it hit our target or if I got out on that day, which shook a lot of folks out, of course, but it was very close to maximum profits on that position, and it was one of our better trades here in November. And of course, it was all still upside from there. So Lilly is great. It's not a buy; it's a hold. If you look at longer-term charts, however, it's the breakout above previous all-time highs is pretty new. It's not really that. It looks old here. It looks overbought, but that's on a daily basis. You go to the weekly basis, you'll see something a little more longer term. So yeah, it's a hold, though. I wouldn't be buying Lilly right here, but it's certainly not one you want to dump anytime soon. I like that. Costco. So Costco got an alpha gold alert a couple of days ago, and it was on that bar right there. It went nowhere for a couple of days, and then today, in a very red tape, it's playing safe haven, and as it should, because we were just in Costco a couple of days ago, and the parking lot was totally full on a Monday. The lines were long. Everybody was buying stuff for holidays, and yeah, it's going to have a good ripper. I'm not exactly sure why it's been so beaten down, right? It's been in this long downtrend ever since, I mean, really, ever since the all-time highs over here around 1100. And now it's down at 99.23. So I like what it's doing, right? So we're just above a big volume shelf. It's pushing off, I should say today, this range lows, right? All throughout here. We've got, all this is starting to get a little bit higher in terms of those lows. And it is going to have to work its way through a lot of overhead. A lot of folks who bought up here around 940, who bought up here at 955, who bought up here at 970, and they've been waiting for the price to finally get back to their entry so that they can get out with a break even. So you'll see this. You'll get really nice up days, and then you'll get a big slam where everybody's taking their profits. That's just how it is when you have this long-term downtrend, unless we get some news that trumps everything else. But I do think that this looks pretty good, right? This looks very good going forward. I better just do a couple more. TEM. Okay, so we're tagging the 200 period moving average today. That's a good sign. It hasn't gotten any lower than that. It is still in an uptrend per the LRC. That's a very sharp slam down on earnings, which is not a good thing, right? Typically, if the earnings were good and the forward projections were good and the CEO is out being really positive about the forward prospects, you're going to see it go up after earnings, not go down. So the market, it's just out of favor with the market. And as I said about Costco, you're going to have the same phenomenon here. Everybody that bought up in this area, 77, 78, when price gets up to that level, they're going to start selling into the uptrend. But it's at 67, and if it could get up to 77, that's a pretty nice trade, right? A really nice trade, 12, 13%. And I think that would probably happen. Kathy Wood has been out buying TEM. I know a couple of other hedge fund players have big positions in TEM. There's a lot of hope that this is a big disruptor in the insurance industry. So, you know, take all that for what it is. But if you're going to play this one, put your stop, I would say below around 64. Put your stop around 64. Make it small and hold on for several weeks if you can, because it'll probably take some time for it to get back up to the low 80s. Okay, let me do, well, BRKB is playing safe haven today because everybody knows that Warren Buffett and the people that he's trained to take his place are value players. And so everybody's going after value stocks today, not growth and speculative names. So that's why this one is up so much. Now, when a stock has been beaten down like this, it's been out of favor with the market for a long time, and then all of a sudden it has a nice bounce. You kind of have to think the reasons why it's bouncing today are the same reasons why everything else is coming down, right? It's what was out of favor is now in favor, out of favor. And that's not going to last. The overall market has been rewarding growth and speculative names and tech and AI and all of that. That's going to come back. And when that happens, you're going to see people getting out of Berkshire Hathaway and out of the value plays because they're going after alpha, right? They're just in this one to get a little bit of alpha while everything else is falling. And then they're going to pull their money out with their profits and put it into tech again. So just beware of that. I don't know if the fundamentals here are worth a longer term hold, but technically speaking, it's not horrible. You're going to come up here against this shelf at 9487, and you're at 9398 right now. So not a whole lot of upside, 4 or 5%, until you start getting into some real resistance. But it's certainly a good mover today. Let me do one more. Netflix. As I said, well, we did Netflix already. CMG. Okay. So Chipotle. They are building new restaurants, I know, because they're putting one in our neighborhood soon. So that's a good sign, but totally out of favor with the market. And anytime you have a big drop like that on earnings, with very, very few exceptions, especially one that's been dropping on earnings like that was not so bad. Yeah. It's really been out of favor for a long time with the market. I'm not exactly sure why. Maybe too much competition, maybe the price of food, inflation. I don't really know, but yeah, I wouldn't be playing this for a bounce. No, the ones that we saw earlier where it's coming, it's been in an uptrend, right? And it comes down to the 50-period moving average. That's where you want to catch the bounce. You don't want to catch the bounce below the 50, below the 200, below the 21, right? Things don't tend to bounce very well down there. Look at the ones that are in an uptrend, have pulled back to a level of support. That's where you're going to catch the best bounces. All right, guys, I'll let you go. God bless everybody. Have a great rest of the afternoon. We've got the Power Hour coming up. We'll see what we can do with this crazy market, and we'll wind up the week tomorrow. God bless. Bye for now.